Hello friends, welcome to bsvtrainings.com. My name is Amit and today we are going to talk about some brief information about Hyperion Profitability and Cost Management. As this product is gaining good popularity and in terms of job openings are also there, so we'll have a very brief overview of HPCM, and there are a series of videos in which we'll talk about HPCM and how to implement this in a step by step. So in today's video we'll see very high level overview of HPCM. So HPCM is one of the product from Fusion Edition, and as it is mentioned over here, it's an analytical application which is designed primarily to manage cost and revenue allocation, which in turn help organization to calculate profitability. Profitability with respect to different product, different segment, different customer, different business vertical. This is what HPCM does. And in terms of product placement, if you look at your Oracle HPCM Architecture, there you see HPCM sit along with Hyperion Planning, Strategy Management, and Financial Closing. Your underlying source system could be one of this. You could be using traditional data warehousing. You may be using your semi-structured data sources, Excel, business processes, multidimensional database, or your transactional system. On top of this, you have a common enterprise information model. And as HPCM use as base, so the source, it's an application people will communicate through. The underlying data will continue to be storing as base. In addition to this, your common enterprise information model has BI server, dimension management, and predictive analytics. HPCM can be accessed through workspace common interface, where all Hyperion product can be accessed through workspace. So let me erase this. HPCM, as I said, is primarily designed to calculate and help to calculate profitability, which enable organization to understand the true cost and profitability drivers within an organization, which in turn help users with a greater visibility and flexibility to improve resource alignment. So the better you allocate your resources, the more you assign your resources prudently, the better, the more profitability you gain. So ultimate purpose is to calculate cost, in turn calculate profitability through different drivers, and help organize to identify the appropriate resources and alignment of resources. We use a lot of complicated words, which some of the words you might not be very sure about, so we'll go with a basic definition of what different terminologies are used. The first common terminology called profitability. So what is profitability? The simplest definition of profitability is money an organization has left after paying expenses and taxes. This is profitability. So what does HPCM does? HPCM in turn eventually help organization to leverage the profitability and helping organization to identify the right profitability segments. So profitability is the primary goal of any business venture. Without the profitability will not survive for a long, which is quite obvious. It means HPCM is not a luxury, it's a solution which every organization needs in order to identify and leverage the profitability. Profitability is major in terms of income and expenses. Another term one should be knowing before you start working with HPCM, the term is called profitability analysis. As I said, HPCM is an analytical application, so it helps eventually to analyze profitability. So analysis is actually profitability model is a part of your ERP solution, but it's a conventional profitability which may not fit into current demanding business scenario. The business would like to know the profitability segment in more detailed manner. So conventional ERP solutions may not fit into this requirement, where business would like to know more detail about individual customer product. They would like to know which product customer is more profitable, not only to current, historical, they also like to see the trend analysis, predictive analysis on top of your profitability. So I would like to see what could be my future customer, future product which is more profitable to me and contributing more in terms of revenues. So this kind of predictive analysis, trending, forecasting may not be possible with your ERP solution, and therefore we need a separate product which help us to analyze this kind of analysis. Profitability can be analyzed, evaluated with one of these parameters. Business may like to see what are different profitable business, profitable product or services. What business segment are profitable to me? For example, I'm a manufacturing company and I manufacture multiple product and provide multiple services. I've got different business segment, but which business segment is more profitable as compared to another? In addition to this, what are different channels? I may have a different sales channel. Maybe I'm selling my product over online stores. I have a online store, whereas I have got a physical outlet, which is more profitable to me. It may be possible a physical outlet making more sale, but they are not profitable, right? We also like to see what geographical area or is more profitable to me, what customer segment, what stage of production process are more profitable to me. So business like to dig into more detail about and would like to find out what are different ways through which we can evaluate the profitability and identify the product, service, customer, distribution channel are contributing to my revenue and more profitable to me. So we like to dig into more detail and figure out more information. To make it even easy to understand, I made this is a two-dimensional view of your business. With respect to customer and product, I've taken this in a two-dimensional view. So the more 2 plus plus shows more profitable. Intersection of customer and product. The customer one with respect to my product one are more profitable. The highly profitable customer and profitable product. As we go down, the profitability decreases and is moderate profitable. Or maybe some products are not profitable at all. They're losing profitability. Or mixed bags product. So a simple model, by keeping your customer product with the intersection, you can at least identify what product and customer are profitable to me and to what extent. Profitability, every time when it is measured, it is important to see this tree structure diagram, because many of you may be very new to the profitability terminologies. Taking this basic tree structure will help you to understand the profit is evaluated with respect to revenue and cost. Revenue in turn evaluate with respect to your price and quantity. Price, product, quantity, multiply quantity, it turns out to be your revenue. And the parameter for prices could be price discrimination and so on. Similarly, you see quantity could be customer segmentation, loyal switchers, new or existing. There are many parameters to which you evaluate your quantity. The cost could be broadly classified as fixed cost and variable cost. The fixed costs are like your capital expenses, capital equipment, land, building, and then you have variable cost. So when you design your profitability model and consider your measures, you need to pay attention to this model. Variable cost could be labor, material, and energy, which may vary from time to time. It is also important to see the whole how profitability is calculated and what different terms are being used. So in this example, I'm trying to explain you one of the allocation type called ABC, activity based costing. And the idea behind this to explain you is to figure out what elements are required in order to perform, in order to calculate your activity based costing, and how we can relate them with respect to our HPCM. So I use the two terms over here, some terminologies like stages, business, dimension, measure, point of view, and driver. We'll see them in our HPCM architecture in the next slide. So in this example, the stages are product and shipping. My business dimension in New York, and measures or your facts are initial and machine maintenance. Let's see this how it works. So I would like to find out the profitability of my different product A and B, right? And we like to see allocation. So in this example, we took two activities, initial setup and machine maintenance. There's a number for initial setup and machine maintenance. And make a note over here, the cost driver is number of setups and machine hours. The cost driver. So we divide by cost driver to find the unit cost. So with respect to we assume there are two product A and B, and we are trying to evaluate The cost with respect to product A and B. We have a cost called direct labor hours 7,000 and 3,000 respectively for product A and B, and this is total cost. Although I have not been using this direct labor cost in this example. The number of setups done for product A is 30 and product B is 70. The total setups are 100. So number of setup is one of my driver. I found over here total value. Number of machine hours is another driver, machine hours, which is 1200 and 3800 respectively for product A and B, and the total value is 5000. So in order to find the unit, we need to compute the indirect manufacturing cost per unit to each product. It's simple, divide by, take a initial setup or machine maintenance, divide by cost drivers. So your initial setup is 107,000, divide by your cost drivers are, number of setup is 100, so you got 1070 per setup. Similarly, total maintenance cost is 5000 and machine 50,000, total cost 50,000, total machine maintenance cost 50,000, divide by your cost driver 5,000, so $10 per machine hour. This is what we found. Let's see with respect to product and product B. This is we found for total. With respect to product A, I'll calculate, this is for unit cost, with respect to product A and product B, I'll multiply, this is unit cost, setup cost for individual product, multiply by 30 units for product A, 32,100, and machine maintenance 10 per unit, and total units are 1200, so 12,000. Similarly for product B, I calculate this setup cost and maintenance cost. So I get to know over here total cost of product A and total cost of product B. The requirement over here, the business would like to calculate the company plan to produce 350 units for product A and 225 units of product B. I got a total cost. So in order to find the unit cost, I divide by 350. So this is how 44,000 divided by 350, I got 125 unit per unit cost for product A and 50 per unit for product B. The important parameter to pay attention over here, when I map with my HPCM, these are the dimension we needed. Let's discuss this in more detail, because now you know how cost allocation is done. We see how to relate this with HPCM. When you look at over here profitability and cost management architecture, you find HPCM behind this can use S-space. It used two S-space queue. The below architecture shows a workspace, a common interface through which your business users are going to communicate to HPCM. It's an application. So workspace, common interface. And EPM to maintain you load your metadata through dimension library, create your application like application library. This is similarly you do for like HFM or planning to load metadata and create application, EPMA application. The data is input through EPMA, dimension libraries, you load data to shared dimension, and then in turn assigned to application. It's exactly same way you do for planning, you do over here, or you could use DRM. So we use two different cubes. One cube is BSO cube, another one is ASO. All calculation take place in BSO. The architecture is pretty interesting, and all calculation takes place in BSO cube, and all data transfer to ASO cube for reporting. So we have reporting cube and data calculation cube. Finally, when you prepare your report through Smart View Financial Reporting, you refer your ASO cube. I'm going to show you this architecture in my after this slide. I'll show you live into my HPCM application. I'll take you to my HPCM application and show you there. This is a slide which talks about the same thing in more even detailed manner. So you see your interface is workspace. So as in given diagram, HPCM use two kind of cubes, BSO cube and ASO cube. Block storage, all calculation take place in block storage. All aggregation and reporting done in ASO because of performance point of view. This all are clubbed together. It's one common unit where your block storage and aggregate storage fall. The user sees data through ASO, but behind the screen all the calculation take place under BSO. all reportings are done with ASOQ. And the metadata management, applicant deployment, you do continue doing in EPMA product, like your dimension library and so on, an application library. The beauty of this process is data transfer between block storage to aggregate storage internally. It's out of the box and there's no explicit event is required. All happen automatically. I mentioned over here some important points, key points which one should be knowing regarding the architecture. As I said, it uses 2D cube. In addition, this HPCM also uses relation database to store metadata related elements. All metadata stored in HPCM. Like in planning, we use metadata and RDBMS. In addition, this HPCM uses 2 S-based cube, as I said, block storage and aggregate storage. Data push from block storage to aggregate storage automatically, and it's out of the box from HPCM. Change to dimension, change to metadata, and pushing data from block storage to aggregate storage are all achieved automatically within HPCM without writing any external code or script. That is the beauty of it. This is how it's simplified. And many of time people ask you to how S-Space, you could achieve the same thing using S-Space, but the kind of complexity S-Space, one has to write a code of 20,000, maybe 1,000 line of code to do this activity, and it's not very convenient. The maintainability is lost, which you achieve through HPCM. So as shown over here, the diagram use RDBMS for metadata, and in addition to this, you use 2 S-Space cube. This shows an important steps to build your HPCM cube. You see the first stage. Now if you go back to your requirement sheet, the ABC model I shown you just before, you find it there. I use stages. So the stages are product and shipping, right? In this example I show the stages are done in 3 steps. What is stage? Which organize the steps in allocation. How allocation done? Allocation generally done in process, in stages. So in this example I shown, we calculate a departmental cost pool, then further drill down to facility center. There are 2 facility center, administration cost center and direct center. Further we drill down to customer and product and market segment. So allocation happening in a go as a whole from departmental cost pool to market segment. That's the first step one supposed to do it. Second step, you identify the business dimension. So business dimension, which describe the object within your each stage in your model. In this cube, we assume the business dimension are product and region, and with respect to product and region, we would like to evaluate the cost and profitability. If you go back to the requirement model, which I shown you over here, business dimension, in this case we use only region, right? So we are calculating, assume we are calculating for one region, but there could be multiple business segments. In different stages, I could have 3 business segments. Then you have measures, which is most important element, which contain the measure for like a cost, revenue, driver, selection, and driver data. Now again go back to the allocation which we calculated for ABC. You find our measures are initial setup and machine maintenance. Initial setup, machine maintenance. This is our major dimension. And our drivers are number of setup and machine hours, which we need at the next level. So business dimension, major dimension, then your drivers. We'll talk about point of view dimension. Point of view dimension is like which consists of your time, period, and scenario. With using point of view dimension and combination of time, period, and scenario, you could do what if analysis. This is what if analysis. What if product cost is increased by 10%, how it is going to impact my profitability, right? Or decreased by 5%, how it is going to impact my profitability. So we can do what if analysis with respect to these 3 dimensions, the point of view. And then we have a driver, just now I shown you. Driver, a number of machine hours and number of initial setups. They are your drivers. So all the time when you do allocation, drivers are important parameters which define how allocation take place. Assignment is another dimension which talk about map source data to destination directly by using your define segment rules. So you in 6 step this is done. I like to quickly show you whatever we discussed so far. I have a HPCM application, and there's a sample application HPCM ship along with this. There are two kind of application, detail and summary. I used over here summary one. This is my application and create a 2 space cube. If you look at this, I open my HPCM application. This is how the interface look like, and it has got 2 cubes. See this, as I said, the HPCM use 2 cubes. It uses, one is your relation database, one is your block storage cube for all calculation, and another one is your aggregated. So the C for calculation and R for reporting. If you look at the structure, one of the important element is a measure. Like in our example, we used initial cost, machine hours, initial cost. My drivers are machine hours, number of initial setup. Then there is another system defined dimension called allocation. Here we talk about different kind of allocation over here. It seems like it's stuck up. We have allocation and system defined dimension. Okay, so as I said, it has got measures. Measure in turn consists of different allocation measures like unassigned cost, unassigned revenue, initial cost, gross cost. Okay, and you see they are identical. And then you have different kind of drivers, major drivers like quantity, rates, weight, percentage, like unit cost. All these are drivers. Then we have a different kind of allocation. The system defined measures, system defined dimension or allocation type. So we have direct allocation, and we learn in subsequent session what is general logic allocation. Right, then we have system allocation 1, 2, 3 variables, total allocation, indirect allocation. We in turn have got a point of view. As I said, you got year, scenario, and period. Right. In addition to this, when you look at the browser based interface, this is how it look like. You have got different manage model. You can see the model summary where you see the information about configuration, your ASP server configuration, and your model preferences. You have got different stages, which is not configured over here, point of view, different manage allocation, different validation driver, validation rules, reporting, calculations. So this is in a subsequent session we'll talk about step by step how to build the complete model, create allocation rules, define drivers, and finally proceed and do. The end result is preparing a profitability allocation reports. That's a brief overview about HPCM today. Do watch our next video to talk about how to create first HPCM application. The next video I'm going to show you how to create sample HPCM application, and next video I'll talk about how to use EPM HPCM application, how to create drivers, model, and all. So appreciate your time. Thank you very much for joining today's session. Should you have any question, please feel free to write to us. Our site is www.bhptrainings.com.